Hello folks, welcome to Money Me. I do appreciate you guys stopping to check out my channel. Full disclosure, I am not a licensed broker. I make videos to basically talk about the market, trading stocks, all things money. I want to do more videos, and sometimes I'm just busy doing other things that I don't get paid to do this channel. I have 1,000 subscribers, and you guys can help fix that by clicking the like button and subscribing to the channel if you just want to hang out and talk, or just kind of get a regular person's perspective on trading stocks and things in money. I've been a landlord, I've been a business owner, restaurant business, I have a reselling business, and I've traded stocks and options over 20 years. One thing here is I'm showing you the losses on my channel, so not that that's something to brag about, because we want to have made tons of money, manage several accounts, and have offered actually helping with my older kids with their 401ks, and have done my own, and outside have helped other people make stock picks and stuff. So with that being said, I don't recommend anything that I mentioned to go out and buy, because, and I've had people say to me, hey Pat, can we just track what you're doing? Well, if you watch the videos, yeah, you could see. And the problem is what happens if I buy a stock for example 10, sell it for 20, and 2 months later it's back down to 17, and you're like, oh, you never told me. So I think everybody should always do their due diligence and do their own homework. So I got a viewer named Gordon Burns, and I'm going to put it up here. It says, Money Me asked about Rite Aid. And if you can see, I have my Webull desktop pulled up. It's free. You can get on, if you have Webull, you can get the desktop, and I like the charts. And you know, I'm always looking for different information. Again, doing your homework, using Yahoo, using StockTwits, using Webull, just using a bunch of stuff together to sort of try to make sound decisions in when it comes to investing or trading stocks. Because clearly anybody who buys a stock and sells it sometimes within a week, a month, is a trader. Someone who buys a stock and keeps it for multiple years is more of an investor. And I think in today's climate, especially the last 5 or 10 years, it's really hard to be an investor because things change so rapidly, and there could be missed opportunities, or you become too greedy, or you sometimes hold on to some things too long and companies go bankrupt, or or you sell things too fast. I've made the mistake of owning Netflix in the past, and for about a year it did nothing, and it took off. I would have made a lot of money. And you hope that you learn from those types of things. What I've recently have begun to do, because I was following some people on YouTube, on Twitter, that really were focused on a small, but I think they, honestly, now that I look back, I think they were kind of getting in and out the stock, and it's one of those things that when the stock is not in favor, they don't talk about it much. They seem to move on, and you're kind of left holding the bag. That's where I wanted to create this channel, to basically share my experience and talk about. I enjoy talking about business. I enjoy talking about stocks and options, and I think that the average person, if they do their homework, they can beat mutual fund managers. Historically, over 10 years, you typically get 11%. I was doing very well for one account, was getting around 25-30% a year for about 3.5 years. Now, the last 6 or 7 months, having relied on some other people's opinions and stocks, I've given some of that back, and I think I'm going to basically try to focus on picks that I know, and if I do get involved in other people's picks, I am going to limit my exposure as far as how much I could potentially lose. It's tough, because really no one stock should make up a large percentage of your account to the point where it can ruin your account. So as you can see here, I basically made a video talking about FUBU, and I got out of FUBU. And Gordon Burns, which I'm going to again post here, says, Money Me, he asked me about Rite Aid. Rite Aid is actually a Pennsylvania-based company And I live actually not far from Scranton, from where Rite Aid was initially started. I had said that I really wasn't a fan of Rite Aid. I'd really get into Walgreens. So the comment was, "You mean they're ordering wrong stuff that doesn't sell? I just saw the stock is at $5, and the whole company is at under $300 million market cap. Also wondering your opinion on Viacom and PayPal you've bought in the past, as also now are cheaper." One thing again, and I want to mention the latter two. Viacom I was really into big. To the point it was in the 30s, and it had dropped down to 12 when the pandemic was shut down, and got into it even more. And when it got back into the 30s, I had gotten out. Now, I had missed a huge run because it had been shorted, and a guy was forced to cover the stock. And let me pull that up right now here, Viacom, while I'm talking about it real quick. We're going to talk mostly about Rite Aid today. Oh, that's right. They changed the name. So I don't know if the symbol will come up or not. Yeah, they changed the name to Paramount. So let's see if, Paramount Global. So if the chart will reflect that properly. Yeah, it will. It will. Yeah, it was crazy. So back here in last year of 2021, it had gone, and I mean, look at this. And this is a daily chart, but basically, you're talking, there's 5 trading days in a week, and roughly around, I was annoyed because I had gotten out in the 35, and I was hoping it would pull back, and it had went here in the 50s, and all of a sudden, I mean, look, 1, 2, 3, 4, 5, 6, there was only 6 trading days between January 27th and March 15th. So roughly 6-7 weeks there, that stock went from 50 to 102. And here we are back down to 27. And what I remember is there was a mutual fund or a hedge fund that was heavily shorted with borrowed money, and they had to cover the position. So that really drove the price up. So that would have been, I had gotten somebody personally that I know into it around $18, and I had messaged him if he even had, considered getting out at around 70, 75, and he wasn't one to really watch stocks as much as, and he's sort of oh, well, I get my dividends long term. But, I mean, look, here at 102, within 11 days later, it gave back basically 3 weeks of gains. And that's where you sometimes, I think I would worry that if you're not paying attention to the market for a month, you can miss out on huge gains, and you also could have sticker shock, or when you get that email that, especially if you're on margin. Now, I wouldn't recommend really too much margin right now. When I say too much, if you have $10,000 in your margin and you got 20,000, your margin at 10,000, maybe you don't want to be that exposed at 50%. Margin is good if you're willing to sell short, but limited capacity, because again, the market could correct and you could wind up paying back. Typically, margin is good when the market is going up and you can leverage that money, because you're only paying, let's say, 4% back, and if you're getting 10-20% return. But that's sort of a whole another topic, and I don't want to confuse people most people, I assume, that are watching this are smart enough to understand how margin works and how it can get you in trouble. And that's what's really been, I think, happening a lot lately also the past couple months, is that you got people that have buying power by using margin and have taken a beating because stocks are going down. It doesn't matter. The broker doesn't lose their borrowed money, their margin. So you either have to pony up more money or you have to sell some stock. And it gets to the point where if you don't have the money, and that is the problem. Some people say, that's it, I had enough. And then there's more forced selling that happens. And so, again, that's for another, this is just my thought process. I'm not reading a teleprompter or nothing like that. This is all us, in a sense, talking about the market and really understanding. And a lot of people, honestly, if you don't understand what margins, you should even really be investing probably into individual stocks. You should just be investing into like a Vanguard or, a mutual fund, and let the money managers do that. And that's the safest way to do it. We do a mix of both. I know through my wife's work, she gets a 401k, and honestly, I don't even care if the market does correct at 20-30%, because when you're getting a 100% return with the employer match, even if it goes down 20, you're still ahead. So, all right. So he brought up about Rite Aid, and I'm not a fan of. I'm not. Here's the funny thing is I know Rite Aid because I have a business where I buy and sell things, and I will buy out. If the store closes down or moves, sometimes I will buy out some of their inventory that's in code and resell it, and not for a higher price than what is out there on the market, but for basically the going price. And they last year had wrote off like $100 million in inventory. Now, did I realize the stock was $5? No. Do I think it could go higher? Yeah, of course. Do I like it for the long term? No, I've never really liked Rite Aid for the long term because they never can seem to get their act together. Now, the analysts, look, they have a target price of 4, an average of 3, and a low of 2. And the stock is $5. That's not to say that they won't be wrong, because the stock was up at $10 back in March 29th of 2022. And here is at $5. The issue with, Gordon brought up, it has a market cap of $300 million. Okay, let's look into that. So what I'm going to do, and I'm going to bring the screen over to you guys. Here it is, Yahoo. We're on the finance page. We're going to type in RAD. And we're going to look into that $300 million. Now, here's a good way to do some of your homework and really look into it. Even Yahoo is representing a $3 price target. And if you look, even a 5-year max, at one time, yeah, it was in the 50s and the 60s. And even, I think it was 30 about a year ago. 17, 22. They had sold a bunch of their locations to Walgreens, but wow, yeah. Now here it is. They have shut down a lot of stores. Okay, I paused there for a second, but here's an article that in December, Rite Aid announced plans to close some of its stores to reduce cost, improve profitability. The Camp Hill, Pennsylvania, I'm based in Pennsylvania, has identified 63 more stores, or about 2%. The stores are expected to provide $25 billion savings. Yeah, they had closed 145 stores. And I just saw this with Walgreens recently too, and I bought some of their inventory. Is that they'll put millions of dollars into building these stores, and if they don't work 2 or 3 years later, they're willing to pack it in, even though they got millions of dollars, and just walk away. And that's expensive. So let's look at the statistics here on Yahoo. So their current market cap on today's price at $5.38 is $360 million. What I don't like, they have approximately $40 million in cash. They don't really have a lot of cash. So, 40 million sounds like a lot, but it's not. But they have $6 billion in debt. $6 billion. So tomorrow, even though, pointed out, you couldn't buy the company for $360 million, even if Rite Aid sold it for $5.38. There's no premium. You would have to take over that debt. So you're buying it for 5.93 billion, 6 billion plus another 300. So you would be buying it for 6.3 billion dollars. And we know that doesn't generally happen, that you just have a takeover like that of a company. I mean, even at a 50% premium of today's stock price, you're talking roughly another 180 million. So you're talking about $6.5 billion to buy this company. As you can see, the 52-week chain, it's down 70%. So the 52-week low is 5 and the high is 23. They have, and I wrote $100 million in inventory off last year alone, claiming that COVID caused them to not have people come into the store, and they weren't buying flu items and stuff like that. So basically the money that they were getting for COVID shots and things like that, and a lot of that was government sponsored, was a lot less money than they made on the flu shot and stuff like that. So let's look at their profile. So their current revenue for the year is 20. I mean, look at that. That's a big number. $24.5 billion. And I've given you guys a raw, look and how I would look into a company and how you should look into a company by using the internet, going on to Google, going on to Yahoo, and finding this information out. I mean, real estate alone, when you think about 6.3, like it runs through my mind, $6.3 billion. And they have $25 billion in sales, $6.3 billion. These are low margin businesses. If you think about what's happening now, and I will give credit where credit is due in Rite Aid, is Rite Aid is closing a lot of underperforming, poor looking old stores. A lot of the Rite Aids for years, their stores were very crappy looking, and they've basically closed them down, built nicer locations. They've remodeled in some of them, but that's expensive, and it's nothing for someone to spend even on a remodel hundreds of thousands of dollars. I know the store in our hometown here, roughly they have $6 million into that location, just acquiring the land with the permits and building the building. So it's very expensive to build a location. So Rite Aid is based out of Camp Hill, Pennsylvania, and they have roughly 53,000 employees. Let's see how many they have. Okay, so as of February 26, the company operates 2,450 retail locations in 17 states, and there used to there used to be more. So let's do some quick math here. Let's pull up the calculator. At 24,500,000,000, that's 24 million. Did I do one too many zeros? I think so. Hold on. 2,000, 24,000, 245,000, 2 million, 20 million, 24 million, 240, 2 billion. No, I didn't. And so there we are. $24 billion. That's a lot of money. Divided by what was it? 2,000. Oh, that's weird. 2,450. So that means each location is roughly doing $10 million. $10 million. That's good. I mean, that means $10 million divided by 52 is roughly $190,000 a week. I don't see our location doing that kind of money. I mean, a lot of it must be done. If you look at a lot of the Rite Aids, they're basically mini grocery stores now, which is a low margin business. Typically in the grocery business, you're talking margins after expenses are 3 to 5%. And again, they wrote off $100 million. What I see them doing now is they're writing off more inventory because when the demand was there for stuff during COVID, and I'll give you an example, like the hair clippers, they usually carry 2 or 3. Then when the supply kind of caught up, then they over order, and then they had like 15, and they do these resets, and all of a sudden now they have 12 different kinds, and they're not selling, and they get to a point where, okay, we got to take up less shelf space and have other things, and they start clearancing those out to the point where they're actually losing money on them. That the price is so good, and they're sometimes bringing in so many SKUs that there's just too many, in my opinion. I see this happening at Dollar General too. The same type of deal. That too many SKUs, things sitting behind the shelf that don't sell, and I just think there's got to be a better way. Now, obviously, I don't want to spend 2 hours talking about how Rite Aid should run their business, because who am I? I'm talking about the company and what I think, So let's go back. They do 10. If that number is correct, at 24.5 billion, they're roughly doing about $10 million a store, which is really well, because I know Dollar General. Back in, the last number I had was about $1.5 million a store. So I just assume a lot of that is done. 25 billion. Yeah, here it is. 25 billion cost of revenue. Net profit is 5 billion. Operating expense, operating income. So they just struggle to make money. I mean, now with the cost of labor, that's an ongoing issue. You're probably at $10 million. You might have at least $1 million per store just in wages. And again, these are low profit. So let's see. I'm going to try to pull up some things where I can dig in a little bit more into what they're making as far as. Let me slide this over, and the news. Let me see. Kramer says this stock is very cheap. That was on May 2nd. Is he talking about Rite Aid? Yeah, basically someone called into his show asking about Rite Aid. He said basically CVS was better. I answered back. Wow. Wow. Rite Aid rejects unsolicited buyout offer valuing the PA company at $3.6 billion. Wow, I didn't even see that. Right, okay. So this is some news I didn't even see, because obviously there's thousands of companies. Back in April 22nd, so just a couple of weeks ago, Rite Aid received a buyout offer for $3.6 billion, and it was rejected. And it was Spear Point. They didn't address the company's debt coming due, and they lack any records for acquiring a company of this size. I think if somebody else took over, CVS closed. It was going to close out. And guys, I apologize if this seems a little, because now I'm doing my homework with you guys, and I didn't see that. But what I'm looking to find is what their earnings were. So total revenue. Revenue cost of gross profit 9%. That was for the quarter. Operating expenses. You know, sometimes too, when losses are written, when they close a store, that's another thing. Losses are written off differently. And let me see if I can find what their earnings were the last. Yeah, year to date, the stock is down 63%. Short interest is 17 million. Wow. This is saying, here, I just pulled up another. This is marketwatch.com. Basically, they're saying, look at this. Almost 32% of the shares are short. Earnings per share, they lost $10. Public float, 54 million. Revenue per employee, 463,000. Whoa. So let's look and see what their last. Okay, so the last quarter they reported was April 14th. Rite Aid had posted fourth quarter fiscal results. They a loss of $1.63 a share compared with a loss of 78 cents. Revenue grew at 2% at $6 billion, roughly about the same as what Zacks had predicted. In the quarter, retail segment revenue grew about 8%. Retail same-store sales were up 8.3%, driven by 11% rise in pharmacy sales. And excluding cigarettes and tobacco products, they increased about 3%. Now, CVS doesn't sell tobacco. Rite Aid still is, but I could see in the future we're basically not being able to even sell that. They entered the quarter... Yeah, the pharmacy revenue comes in at roughly $18 billion. So out of that $25 billion, $7 billion is the rest of the stores. In other words, the milks, the other things, the makeup and things like that. The company also revealed plans to lower costs via the closure of 145 unprofitable stores, and they anticipate to generate $170 million in savings in 2023. I think there's a possibility Rite Aid definitely could make money, but they would have to get people in there that know how to manage money and just do things different than what they've been doing for so long. Yeah. Here it was, Rite Aid crashes 20% after Wall Street analysts suggest retailer could go out of business. But this was back on April 7th, and someone put a $1 target on it. And I don't care if you're doing, if you got that kind of debt, and if you're losing, right, they need to generate. That's the problem. They have too much debt, and let's face it, it's not that Rite Aid won't stay around. Someone either could buy them out, or they basically go bankrupt, which makes the shares worthless. So I'm going to look into a little bit more. I'm curious on basically how much they are losing. It says they lost $10 a share for the whole year. I mean, you simply do the math of basically about $550 million a year, doing roughly $25 billion. Of course, their payroll, yeah, so their payroll for pharmacists and stuff is not cheap. I mean, pharmacists make good money. The people that are up front and stuff like that probably, are at $11 to $13 an hour plus, So that's it. I could look into it more. I do appreciate if you guys could leave a comment below. And I would not invest in the Rite Aid. There's just too much going on. I like Walgreens better, and I'm going to stick to that. I hope I provided some information on why I wouldn't invest into Walgreens. They're losing money. There's too many, ands if for buts, they say, I guess. Could they get bought out and stuff like that? But there's just too many other good stocks out there to make money on. That this could. Things continue. This could be a stock that 9 months from now is $3, and I'm looking for companies to invest in that are solid and making money in tough times and good times. And we are in tough times because the price of labor is high, the price of fuel is high, inflation is rearing its ugly head. So, all right, I hope you guys like this. I hope you comment below, leave me a thumbs up. And thanks for checking out Money Me. And I will follow up on the PayPal and the Viacom in another video. And don't get crazy. Don't be throwing $20,000 into one stock without knowing what you're doing. Dollar cost average. I'm nibbling at some. I did buy a couple shares of Disney today in one account. And I'm making slow little purchases because honestly, some prices I think are great, and some companies will always be around. So thanks for watching again, and I'll see you again. Bye.